Good morning, everybody. It's Tuesday, April 8th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. And we'll be sure to get to it during the show. Overnight markets here a little better for grains. May corn up 2 1/4 at 466 3/4. May soybeans are up 10 3/4, 993 3/4. And May Chicago wheat was up 6 3/4 at 543 1/4. We had an export sales announcement here this morning. 240,000 metric tons of corn to Spain for 24-25. Released yesterday afternoon was our first crop progress and conditions report for the year. Corn 2% planted. It's against 3% last year, 2% for the average, so it was right in line with estimates. Spring wheat 3% planted. That's right on pace with last year and the average as well. And winter wheat ratings were 48% good to excellent. That's down from 55% in November. So we have been decreasing a little bit there. 46% is the average. So falling a little bit above where that 5-year average came in. Good morning, guys. Outside markets are better here this morning. The Dow's up a little over 1,200. S&P's up 156. So that's good news. I guess what we know this morning, Europe and Japan coming to the table. I think that's obviously positive, certainly for grain markets, with Japan wanting to get some sort of a resolution here. Israel made big announcements yesterday afternoon, so that was positive as well. And then we've got China digging in. So still a lot going on, a lot to decipher. I think the tariffs, a lot of these reciprocal tariffs will kick in at midnight here tonight. So we will, we'll have to see and certainly what markets do here. But with that, I guess, Ben, kick us off this morning with some thoughts, and then we'll throw around the room.
Yeah, I just going back to a lot of turmoil in the markets the last 4 or 5 days. But corn has held in there really well. Some concerns still of a massively big short in the wheat market. And here we're sitting on day 2 of the roll, and we're at the top end of the range. We sell some corn. So I feel like there's some positive undertones here. That being said, we have a report on Thursday. Not uncommon to have a short covering or a profit taking type of move in the days leading up to a report. So I think we'll know a little bit more on Thursday. People will get a little flavor. There's some speculation that they're eventually going to have to raise demand, which I think people have been waiting for 3 or 4 reports, and then see what comes out of these trade negotiations and the willingness of people so far to want to work with the Trump administration, as opposed to, kind of crossing their arms and saying no. So I think that markets are going to be slopping around. I don't see any big planning delays. If in 2 weeks, 10 days from now, we have more rains forecast for the Eastern Corn Belt, I think we'll start pushing that back a little bit. But nothing looks to me to be overly threatening at this point. We get a pretty decent window of drying here over the next 10 days in the Eastern Corn Belt. So.
Yeah, we're going to warm up this weekend too here in kind of the upper northwestern Corn Belt as well. Dustin, what's on your mind?
I think we've got some major headwinds from the currency side. The Brazilian real has dropped quite a bit off of its highs from prior to this, April 2nd day. So this, stock market sell-off, I think is impacting global markets in mysterious ways. Emerging markets certainly getting hit a little harder, including the real. So that's just one thing that I think, kind of definitely puts a bit of negative tone on things. Of course, if we find some sort of geopolitical accord where there's multiple countries joining the U.S. side and signing trade deals, that could get some excitement again. But just kind of keep that in mind. We've talked about it in the letter a little bit too. It's like, if we take everything at just face value and say, well, China's not going to buy any U.S. beans because we keep escalating on both sides, right? That is quite bearish. It was bearish in 2016 or 2018 as well. But in the end of the day, it is a much different situation. Ben mentioned it yesterday. We had ASF going on. So in a split universe, what would have soybean prices been trading at anyway in 2018 with, China's reduction in herd size? Hard to know what would have happened that year. I think in this situation, we're not really in a great supply excess situation, at least not for corn and wheat coming into this time frame. And you look at the post April 2nd moves, obviously the stock market dropped 21% from the highs, earlier this year, but corn is still higher than it was, coming into that day. And so I think the market's trying to say something about how a lot of this is baked in to a degree. And I think that sometimes the fear and the sell the rumor is a bigger impact than, when we actually get to the fact of China wasn't buying our corn anyway. And we are still fairly tight for all supplies held outside of China, assuming, their supply numbers are even real, not fictitious. So sub 10% global stocks to use ratios, and with, Brazil still having to grow second season crop, and the U.S., weather unknown for the summer. I think the market's doing what it's supposed to be doing is not getting overly bearish just yet until we prove a crop.
Well, and Japan being the number 2 buyer of corn, and the administration talking about them being a priority to negotiate, I think is a good sign. I think if we're flipped upside down, it might be a little different, but we haven't seen, knock on wood, there's no cancellations been come through. Inspections were nice yesterday. So by all accounts, pretty positive there.
Right. And I mean, like, to think that people haven't been trading, some sort of bearish trade war potential. I mean, that's all we heard from analysts, right, for like the last couple of months is just wait till this happens, get bearish. And so I think you can definitely get to the point where the market's properly discounted this potential, especially when China has really been absent for U.S. corn anyway.
Yeah, the difficulty is with the these whipsawing news highlights, with false reports and things like that, and seeing, it's just amazing to see the violence in those swings in the Dow yesterday, and certainly affected our markets to some degree as well.
Yeah, I mean, crude oil, trading down the lowest level in a long time. It's 2008 comes to mind, 2020 comes to mind. At some point when there's global risk off, that is going to spill over into grain markets, and we did see some of that. We do have beans down quite a bit, but if you measure again value of beans and real, it's really not down that much, right? A lot of this I think is related to the fact that we've had a major currency disadvantage happen over the last couple of days with our largest competitor.
Yeah, Justin, is the bean acreage number getting smaller here in your opinion, or are we staying pretty flat?
Yeah, I don't know. I think it's going to be probably weather related will be the biggest, how fast planting goes, or, all those kinds of things, how the financing, happens in the end, or fertilizer prices. Like I think the acres are kind of where they are. And then just like every year, it's kind of how the weather goes and attitudes go towards the end. And maybe there's 1 million acres or something that goes back or forth, but at the most, I would just say too that, Ben and Dustin did a good job of talking about it. It just kind of reiterate, like we're not the same situation that we were the first time around. I mean, I think China's at a big disadvantage when it comes to the ag leverage that they have over us, because they've already, before all this, they limited all the fertilizer that they're exporting. They haven't been buying our products. So, I think not to get political, because I'm definitely no political expert, but to me, it seems like we're trying to get all these, call it traditional partners, EU, Canada, Mexico, to make some concessions and actually close loopholes where China can't build factories in those countries and get the beneficial tax or, implications that our partners get, right? You can't go build, a car plant in Mexico and then move it to the U.S., product to the U.S. and avoid the Chinese tariffs, or, those deals that we've cut with our close trading partners. So I'm hopeful that we get some of those kind of things done, and it actually is quite friendly. Now, having like, a general war with China on trade and some of these things can also have a lot of negative side. Like I saw China dump $50 billion of treasuries, last couple of days. So we're very connected to them. So you don't want, obviously full blown escalation by any means, but I do think we've factored in a lot of this kind of things. And I think a lot of the, I'll call it hedge fund type playbook is what happened last time. Oh, we did this, right? We broke here, but the totally different circumstances, and I not even talking about ASF, but we also had a ton of beans on the books, ton of corn on the books, and they've completely gotten away from the US already. So, I think we're probably overdoing it, in my opinion. To say that we're going to go back to $9 beans because that's what happened the first time, I think is, not that we can't do that. We could have, I think the bigger risk is just an equity sell-off or general, like Dustin said, risk off, sell everything because that's just what you have to do to make margin calls and just get out. But they're already short, they're generally short our markets. So I just do not think it's the same as last time.
It's a very, very hard question, Justin, but I mean, is this a scenario where you mentioned, I mean, they haven't been buying our ag products. They've been talking about becoming more, sustainable on their own and looking to Brazil and yada, yada. But can we get through this thing, in your opinion, without them? Or is that going to reshuffle the total picture for U.S. agriculture if they really dug in?
Yeah. Can we? Yes, we can, in my opinion. But you have to, China has been, getting away from the U.S. for 5-6 years. Yeah. But we've, don't think that we haven't also been doing the same thing, right? These biofuel policies, these hundreds of billions of dollars that have been invested in, biofuels and things like that to increase our demand. I'm just hopeful that we, continue down that page. I mean, it'd be great to talked about this 100 times on the show, but my opinion, if you really ramp that up to where it's mostly being used domestically, and then if you ever have, just talking strategically from like a national, security standpoint, you could always shut that off if you needed the food or you needed something, right? To have all that extra billions of bushels that you could use if there's a drought or, something bad that happened, and you're not reliant on China. I mean, Brazil, like, high-fiving each other, but you're 100% reliant on China.
Right.
Like that's it's such a bigger part of their GDP, to be, anytime there's a communist country that's, in charge of your outcome, I think that's a really bad situation. And I think we're realizing that with onshoring some of this. Like, obviously, the argument, are we going to have a bunch of American workers go back and make T-shirts for 50 cents an hour? No. Like, but do we need to realize that China could cut us off of all these major chips and things that we can't do? I think that's a bigger play that we have to figure out.
Yeah.
So I'm not of the opinion that the actual play is we're going to try to go to war with the entire world and not. We realize that we need a lot of these partners, and we're just trying to make it probably lock down the influence that China is putting on them.
Oh, very good. Treasury Secretary, on this morning, and we're up to over 70 countries now trying to get in line. So, in some capacity, we can say that this is moving in the direction that I think people wanted. It'd be different if nobody was coming to the door, but they're trying. When the difficult job for the administration now is to line them up and say who's going to get priority. And I think that it's nice for us that.
Well, and don't forget, I mean, China started with the China 2025 initiative, right? Like, they made it very clear that they want to be the new standard, and I think we're fighting back on that. Mm-hmm. And I think we're all, looking with a microscope on tariffs on, islands with penguins, but I think really though, they're just really trying to fight that China 2025 initiative, personally. So.
Yeah. No, very good. Right, real quick here. We got a couple minutes. We got big swings in cattle on big volume and a big drop in open interest, and then hogs struggled yesterday, a little higher to open this morning. So what are your thoughts?
Yeah, well, I don't want to say it's just risk back on, but I think everybody woke up looking at the board and the discount to last week's cash, and just overall the outside market sentiment is a lot more positive than it's been. So naturally, likely to see some pretty good action today. You've traded some longer term moving averages in the cattle market. I mean, obviously it's been risk off, but at this point, I think, as we've been saying, the dust will settle at some point. Cooler heads will typically prevail. So hopefully we can see things start to calm down a little bit. But yeah, this was the first real sign, I think, of big liquidation that we've seen. Open interest in the live side was down 15,000 contracts. Feeder open interest was down 4,084. So we were seeing it yesterday. Definitely some panic here, but I think things are looking to hopefully start to stabilize a little bit, which we kind of saw in the hog market. Just kind of finished back in toward the middle of the range. But obviously, we're still in the midst of the headline trade. You never know what's going to set the market off. I mean, I don't want to, like I said, I don't want to say this is risk back on, but it just seems like, hey, we're getting a little bit overdone here. Maybe need to see something concrete at this point. And all things considered, the beef market has been holding up really well. Joyce was up $1.05 yesterday, Select up $2.12. So that really hasn't changed. I mean, we were even seeing that on the pork side of things. Carcass was up $1.50. Bellies were down $2.28, but the overall carcass was still kind of hovering around that $97 level. So yeah, a lot of confidence coming into the day. Just hopefully this was just a blip on the radar, but you're going to get a lot more confidence, I think, during the rest of the week. Wouldn't be surprised to see on the cattle market the packers start to bid a little bit early, but we'll see if that comes to fruition. That's more just kind of a sentiment thing, but we shall see.
All right, perfect. Appreciate the update there. Just coming into the open, we got May corn's up 4.68 is the last there. May soybeans are up 17 now, $10 even. In the May contract. May Chicago wheat's up 6 1/4, 5.42 3/4. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It'll keep you up to speed on everything that's going on with AgYield. Doesn't cost you anything to do so. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open at 8:15 Central Time, streaming live on X, Facebook Live, and YouTube Live. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.